Hey, good afternoon, everybody. One of the things that you may have noticed today is that we had some divergence in some of the markets, and we did have crude oil prices remain very firm through today's session, even though the U.S. dollar made some new highs for this move. So at this point, it looks like crude oil, some of the agricultural commodities, and a couple other ones have been able to either hold their value or increase in value, even with this dollar moving to new highs for this move. So we had crude oil follow equities lower early, but we've got a couple friendly fundamental tidbits out there that are keeping the bulls pretty active right now. We've got some cold weather in Europe that's seen keeping demand firm. Heating oil is actually a proxy for what a lot of Europe burns to heat their homes, and that's gas oil. So we're seeing that keep this market supported. We've got tight supplies in the New York Harbor region that is helping support the RBOB contract, which is unleaded gasoline. There's a couple Reuters polls that we've gotten recently. One shows that many analysts are looking to revise their price expectations higher here for the next year or so. And a survey of OPEC producing nations also showed a much higher compliance with production curbs. So we are seeing these guys tame down their production a little bit. We've also got some geopolitical tensions right now that are keeping prices very firm, and crude oil is a very geopolitically sensitive commodity. We've got the WikiLeaks story and the Korean tensions adding to that. Part of that story is that Saudi Arabia's king repeatedly urged the United States to attack Iran and their nuclear facilities. So when you've got a large amount of the world's production coming out of one region, and that region is historically one of the most unstable regions out there, when you got talks like this, that's going to add that geopolitical risk back into the equation. And again, with North and South Korea going back and forth here with their artillery, and the United States being involved in the exercises over there, that's going to also heighten tensions. So here we've got the technical side. The crude oil continuous chart showed very good support over the past 2 weeks down at $80 a barrel. So we're still seeing value down at that level. The high from 2 weeks ago is 85.77, and we're going to want to keep that number in mind here. But as long as this market can maintain some higher prices, we've got the long-term downtrend above us. It looks like it's right back at these highs from this March to May time frame. And then we've got the high from a couple weeks ago that got near that $90 area. So we're still going to look for things to remain firm here short term. This is the December contract. That 85.77 on the continuous chart comes into play here because we could have a potential head and shoulder top. This thing would be near textbook if we failed up here and worked our way back down through this neckline. Again, that would probably occur at the same time that we would be taking out this uptrend on the chart. And we've got various moving averages in the meantime that are going to serve as support. So because of that, we are long 2 contracts of January crude oil on our recommendation. We are going to possibly look to lighten up on that and maybe re-own half of it on a pullback. So check our research center here for updates on that trade. Other than that, if this market can maintain strength above 62%, we may very well see a retest of these recent highs. Now again, we're seeing divergence from the dollar chart, but it's still worth noting that this dollar basically looks like it put in a bottom when the quantitative easing round 2 is announced by the Fed, and we've had a little help from the European debt crisis in the meantime with Ireland. So we do feel at some point when things in Europe calm down, we are going to go back to the long-standing idea that the dollar will start heading lower again, and commodities will be bought aggressively at that point. But for the short term, this is a technical buy-the-dip type of market in the dollar. So maybe a pullback down towards this 50% around this 79.50 area may be a spot if you want to be looking to be a buyer near that uptrend.